Welcome to a new video on our channel. Today, we bring you a fascinating analysis that has sparked much controversy in the financial world. The annual performance of Nancy Pelosi versus Inverse Cramer during 2024. Before we begin, we want to remind you that this dynamic chart, which you will see evolve throughout the video, is created based on the data displayed on the screen, with the sources listed at the bottom. If you are not familiar with the protagonists of this matchup, Nancy Pelosi, former Speaker of the United States House of Representatives and a public figure known for her ability to identify market opportunities. Her portfolio has been the subject of speculation and debate for years. Inverse Cramer, a concept inspired by Jim Cramer, financial analyst and host of the program Mad Money. The Inverse Cramer strategy seeks to make moves opposite to his recommendations, arguing that these tend to underperform. Both portfolios start at the same point, 0% in January 2024. However, as we progress month by month, their trajectories diverge in very interesting ways. This video will analyze not only the figures but also the key events that influenced their performances. In the first 3 months of the year, both Pelosi and Inverse Cramer remain relatively aligned. Pelosi's performance shows a slight edge, thanks to a selection of tech stocks that benefited from a sector rebound. For example, her investment in artificial intelligence companies like Nvidia and Microsoft gave her a competitive advantage. On the other hand, the Inverse Cramer portfolio managed to keep up due to contrarian moves in the energy sector, which experienced fluctuations due to regulatory uncertainties. However, the results were not enough to surpass Pelosi. An interesting aspect during this quarter was the influence of fiscal policy announcements in the United States. Promises of incentives for clean technologies increased confidence in specific stocks, which directly benefited Pelosi's portfolio. On the other hand, the Inverse Cramer strategy avoided tech stocks, focusing on sectors with lower volatility but less profitability. In the second quarter of the year, the first major turning point occurs. Pelosi starts to clearly stand out, with significant growth in her portfolio. This is due to a series of successful picks in renewable energy and clean tech companies that received fiscal incentives approved by Congress. Meanwhile, the Inverse Cramer portfolio was affected by its opposing approach, missing key opportunities in this sector. This difference in strategies caused Pelosi to finish the quarter with a significant advantage. A key moment during this period was the tech stock rally following the release of corporate earnings that exceeded expectations. Companies like Tesla and Apple posted unexpected growth figures, boosting Pelosi's portfolio performance. In contrast, Inverse Cramer avoided these moves, missing the opportunity to capitalize. The third quarter marks a surprising twist in the narrative. Inverse Cramer, after a streak of successful moves in cyclical sectors like discretionary consumer goods and tourism, manages to close the gap and eventually surpass Pelosi. This coincides with a global economic recovery that favored sectors that had been challenged during the pandemic. One notable event was the increase in demand in the tourism sector due to a post-pandemic recovery. Stocks like Marriott and Delta Airlines experienced significant growth, benefiting Inverse Cramer's portfolio. Additionally, fluctuations in oil prices led to a rebound in energy stocks, which were also an important part of his strategy. Meanwhile, Pelosi maintained steady growth but could not match the aggressive pace of Inverse Cramer's portfolio during this period. This led to speculation among analysts about whether Pelosi could regain the lead. In the final months of the year, Pelosi makes a spectacular comeback. Her long-term investments in technology and clean energy pay off, driven by positive quarterly reports and a favorable macroeconomic environment. Her portfolio closes the year with an impressive 54% return. One of the keys to this success was her investment in artificial intelligence companies, which continued to show explosive growth. Additionally, Pelosi bet on consumer staples at a time when inflation was beginning to decelerate, reinforcing market confidence. Inverse Cramer, although also closing the year with a solid 43% return, fails to match Pelosi's final pace. This demonstrates that while the opposite strategy can be effective in certain contexts, it does not always guarantee leadership. As we evaluate the performance of both portfolios, it is inevitable to speculate about the possible motivations and decisions that led Pelosi and Inverse Cramer to adopt their strategies. In Pelosi's case, some analysts believe her access to privileged political information may have played a determining role. As a legislator, Pelosi has been involved in decisions that directly impact key sectors of the economy, and her market moves often reflect a deep understanding of these dynamics. For example, her focus on renewable energy during the second quarter could have anticipated the fiscal incentives enacted by Congress. In contrast, the concept of Inverse Cramer offers an interesting narrative. Although this strategy is based on contradicting Jim Cramer's recommendations, the results suggest there is a degree of smart selection in which sectors to avoid. The global economic recovery, especially in cyclical sectors like tourism and discretionary consumer goods, was something that Inverse Cramer successfully capitalized on in the third quarter. However, some critics argue that the strategy also lacks long-term consistency, as it ignores broader trends driving the market. Finally, one must ask whether these strategies are replicable for the average investor. The year 2024 was full of ups and downs for both portfolios, but Nancy Pelosi once again demonstrated why she is considered one of the shrewdest figures in the market. Her ability to identify emerging trends and maintain a disciplined approach was key to her success. On the other hand, Inverse Cramer also had an outstanding performance, proving that a strategy based on contradicting trends can be competitive but not infallible. It is important to emphasize that individual investors should consider their own goals and risk tolerance before adopting any of these strategies. A key lesson from this analysis is the importance of diversification and focusing on the long term. Both portfolios showed strengths and weaknesses at different stages of the year, reminding us that the market is unpredictable and there is no single winning strategy. Thank you for joining us in this analysis. Don't forget to leave your comments on who you think was the real winner of this matchup. And if you want to know which country has the best economic growth forecast according to experts, be sure to watch our next video. Remember to subscribe to the channel, activate the notification bell, and share this video with your friends interested in the world of finance. See you next time.